SCHD is a quality, dividend-focused ETF beloved by dividend investors. On the Dividend subreddit, which has over 300,000 members, it seems like that's all anyone can talk about. It's on almost every post. Even if it's an off-topic conversation, SCHD will be in the comments. It's so popular that there are even posts like, quote, "Why is SCHD so popular here?" and quote, "Turn the sub around. Stop just saying SCHD." The SCHD army did not take well to that. So what is it about SCHD that has taken the Dividend subreddit by storm? In today's video, I'm going to fully analyze the SCHD ETF, explain whether I think it's a good investment, and share my thoughts more generally on investing in ETFs. Now let's roll the intro. My name is Zach. You should leave a like and subscribe to the channel if you enjoyed the video. Periodically throughout, I will be using my own dividend tracking and research tool available at dividenddata.com. First, let's briefly explain what an ETF is and then dive into the specifics of SCHD. An exchange-traded fund, ETF, is a basket of securities that trades on an exchange just like a stock does. The price of an ETF shares will change throughout the trading day as the shares are bought and sold on the market. This is unlike mutual funds, which are not traded on an exchange and which only trade once per day after the market closes. Additionally, ETFs tend to be more cost-effective and liquid compared to mutual funds. This investment vehicle has grown massively over the past decade, with nearly $10 trillion in worldwide assets being invested in ETFs. SCHD is a dividend-focused ETF operated by Charles Schwab Asset Management. It's named the Schwab US Dividend Equity ETF. It trades under the symbol SCHD and has an expense ratio of 0.06%. This is a very low expense ratio, which is great for investors. We'll talk more about that later. The objective of this fund is to track the total return of the Dow Jones US Dividend 100 Index. This index is focused on the quality and sustainability of dividends. It invests in stocks selected for fundamental strength relative to their peers based on financial ratios. Let's look at some SCHD fund level stats and then look at the top holdings which make up the ETF. The fund controls $38.2 billion in total net assets with 515.6 million shares outstanding. The current net asset value of holdings is $74.23. This is the price after accounting for the expense ratio. The ETF has 105 holdings with a turnover rate of 14.49% over the trailing 12 months. Here you can see the collective PE ratio and price to cash flow of their holdings as of June 30th, 2022. The distribution yield or dividend yield of the fund based on the trailing 12 months is 3.26%. Now let's dive into the holdings of the fund, which is really the best way to understand its offering. If you've been following my channel and are an avid dividend investor, then you'll recognize a lot of these companies. PepsiCo is their largest holding at 4.39% of total assets. This is one of the best consumer staple stocks with over 50 years of consecutive dividend increases. I own PepsiCo in my dividend growth portfolio. Texas Instruments is their second largest at 4.29%. This is a great dividend growth semiconductor company that I'm looking to add to my portfolio. I've made videos on it in the past, so definitely check that out if you're interested. Others include Cisco, Home Depot, Amgen, Coca-Cola, Merck, IBM, Broadcom, Pfizer, Lockheed Martin, ADP, BlackRock, Verizon, Altria Group, 3M, and much, much more. The common thread across these companies is that they are established, high-quality businesses that reliably grow their dividends. When you are buying SCHD, you are buying ownership into these kind of businesses. By sector, information technology is 20.78% of their portfolio, followed by financials at 19.64%, consumer staples at 14.69%, healthcare at 12.89%, industrials at 11.19%, and so on. So what kind of dividends can you expect from owning SCHD? This shows their payouts or distributions over time. One thing you'll notice is that their payouts are not consistent and do fluctuate up and down. However, over the long term, their payments have trended upward. This will continue as long as the companies they own continue to grow their dividend payments over time. This fluctuation does differ from most individual dividend growth stocks, but it makes sense given this ETF is more comparable to an entire dividend stock portfolio. Next, I'm going to show what you can expect from investing in SCHD and finally share my overall thoughts on ETFs and how they can fit into your portfolio. But first, a word from our sponsor. Are you looking to grow your knowledge and optimize your investing strategies with professional grade tools? Moomoo can help you reach your investment goals. Moomoo is a trading app that allows you to invest in stocks, ADRs, ETFs, and options worldwide. Moomoo has an impressive, free, real-time Level 2 data that is refreshed every 0.3 seconds. Moomoo's Level 2 data shows up to 60 levels of bids and asks. When you use Moomoo, you will have 24/7 premium, real-time news from leading financial media such as Bloomberg, Benzinga, and InvestorPlace. Moomoo's editorial team curates lists of market highlights and an all-in-one market calendar of key events. Be sure to use my referral link in the description below to get up to 10 free stocks now. You heard me right, that's 10 free stocks. Use my link and sign up for Moomoo. Now let's get back to the video. If you were to buy SCHD today, the current price is $74.27. Let's create a test portfolio on my dividend tracking website, dividenddata.com, and input SCHD. Let's say you buy 100 shares at a total cost of $7,427. Based on the latest dividend payment, SCHD has an estimated forward-looking annual dividend of $2.82 per share. With 100 shares, this would generate $281.52 in annual dividends. This is a 3.79% dividend yield on cost. That starting yield is nothing to joke about. A 3.26% trailing distribution yield and 3.79% forward-looking yield are very solid for a fund growing its dividends like SCHD. The fund has been growing its annual dividend payment at over a 10% compound annual growth rate. There is no doubt SCHD will have a serious dividend snowball effect as you reinvest dividends and they grow their dividend payments over time. When you buy SCHD, you're basically buying a low-fee dividend growth stock portfolio. It's very diversified with 105 stocks and offers a good starting dividend yield and dividend growth. So why don't I own SCHD? It's very hard to argue against. My typical resistance to mutual funds and ETFs are the large expense ratios. An expense ratio reflects how much a fund or ETF pays for portfolio management, administration, marketing, distribution, etc. Think of this expense ratio as a constant fee sucking away part of your portfolio. High expense ratios can have a significant impact. For example, the average expense ratio across the entire fund industry, excluding Vanguard, was 0.49% in 2021, which equates to $49 for every $10,000 invested. Again, that may seem small, but these fees can have a major impact on your long-term compounding. The good thing about SCHD is that the fee is much smaller. At an expense ratio of 0.06%, that's just $6 for every $10,000 invested. This is way better. When analyzing an ETF or mutual fund, always make sure to research its expense ratio and avoid high-fee funds. A low-fee fund like SCHD is perfectly fine to be a large or small part of your long-term dividend growth stock portfolio. It gives you instant diversification and does a lot of the work for you. So again, why don't I own SCHD? Well, I've chosen to build my own dividend growth stock portfolio and avoid expense ratios. Most brokerages are commission free now anyways. You can use ETFs like SCHD as inspiration. Many of my holdings are the same companies that SCHD invests in. However, I only have 23 stocks compared to SCHD's 105. I like to control which companies I invest in and the prices at which I choose to do so. ETFs are great, but I do feel like they abstract the investing process and take your focus away from the reality of the situation. Investing in stocks is buying a partial ownership stake in a business. The focus should always be on the business. ETFs add an abstraction layer away from this fundamental analysis. How do I really know when the fund is a good deal? How do I know it will allocate money to a good business? How do I know that they won't sell or lower an allocation in a stock I like? You're putting a lot of trust in either an index or a manager. I choose to avoid this for the most part. However, I'm a unique case in that I really enjoy investing and find it educational. I like learning about the business models and financials of all these companies that make up our modern world. It's fun and engaging. That said, it does require more active management, which is not for everyone. SCHD and other ETFs will likely perform well. Even if I don't outperform SCHD, I'll have a greater fundamental understanding of what I'm investing in. I think that's important considering how much of your wealth and financial future is tied up in investing. I want to dive in and really understand how reliable a business's cash flow and dividends are. Now, all of this is just my opinion, so be sure to do your own research before making any investment decisions. Thank you for watching Dividend Data. You can sign up for dividenddata.com to track your dividends just like me and join a Discord community of like-minded investors. If you follow me on Twitter, link in the description, you can get real-time dividend news and updates on my buys and dividends coming in. Please leave a comment below, and thank you for watching.